Good morning, everyone, and welcome to the Top 50 Brokers, What Makes a Successful Broker webinar. I'm Yiannis Kotoulas, acting editor at Insurance Times, and today we'll be taking a deep dive into the recently released Top 50 Brokers 2023 report to find out the story behind some of the facts and figures. Alongside my expert panel, we'll be taking a look at the key findings of the report and exploring what it takes to be a best-in-class broker in the current environment. So, just before introducing the panel, a couple of quick housekeeping points. We have a Q&A function today, so don't be afraid to send in questions for the speakers as and when you think of them. We'll make sure to leave some dedicated time for Q&A at the end, but I'll try and also weave your questions into the discussion as we go. We'll also be publishing a link to watch a recording of the webinar, so don't fret if you need to run to the door for the postman and miss some vital tidbits. With that done, let's get started with some quick introductions. Olly, would you like to introduce yourself and your involvement with the Top 50 Brokers report, please?
Hello, I'm Olly Laughton-Scott of, recently now part of MarshBerry, a large US M&A house, but we were for many years IMAS. I've been working with Insurance Times, I think about 15 years, producing the Top 50 Broker report. Importantly, this is not optional. It's actually based on the accounts which are published at Companies House. We do make some adjustments for them, but that is important because if a company doesn't want to be in the top 50, it's not up to them, it's up to us to decide if they go in there or not, and so we base that on revenue. It's not based on profitability, it's a much more complex number of profitability, but what it does, it looks at revenue, and then it looks at various different stats around that. It's called a Top 50 Broker report, but actually it does include MGAs. And that's because MGAs are very much part of the distribution chain and they're not risk carriers. So a business like CFC is up there. In fact, it's been one of the most successful businesses over the last 10 years. Thank you.
Great, thank you, Olly. It's always good to have a bit of information about the methodology used in the report. And thank you to MarshBerry for providing all of the data that brings the report to life. Paul, could you also please introduce yourself to the audience?
Yes, good morning, everybody. Paul Anscombe. I'm CEO of 17 Group. We're a medium-sized insurance business which owns Touchstone, MGA and James Hallam. And I'm speaking to you today from our Penzance office down in sunny Cornwall.
Lovely, nicer environment than where I'm sitting currently in London, where it's raining. Great, thank you for joining us, Paul. And last and by no means least, could you also introduce yourself, please, Mike?
Yeah, hi everyone. So my name is Mike Edgeley. I'm the CEO at the Clear Group. The Clear Group, likewise, similar to Paul's introduction, medium-sized broker, about 800 people, 26 offices around the UK, with a number of different verticals, including our kind of retail business in the UK. We have a number of MGAs in the business. We own Brokerability, the network, and then we also have a presence in Ireland.
Excellent. Great. Thank you for joining us as well, Mike, and congratulations on your recent Broker CEO of the Year award as well at the Insurance Times Awards. So let's jump straight into the main course with those introductions done. Congratulations as well, Mike, on Clear making the high flyer list in the top 50 report. I wanted to start off by asking how you see the broker market at the moment and what some of the challenges that Clear has been facing into.
Yeah, I suspect it's similar challenges to every other broker out there. So at the moment, it's a relatively more complex environment, I think, than perhaps has been for a number of years. And there's 3 or 4 key factors which we see, which are influencing the market, ourselves, but also smaller brokers who end up, as a result of some of these challenges, looking at options. So the first one is just the macroeconomic trading environment. It affects our clients. Our clients have a level of risk and exposure which they insure against, which allows them to take risk operationally. That risk and exposure has changed because of the trading environments they're in, and it takes us, because of that, probably longer amount of time with each client to really understand where they are and what their exposures are in the more recent last 15 months. If you set that against then where the insurance cycle is, the insurance cycle is at a point where insurers have come out of COVID. They have put a lot of rate through in order to shore up balance sheets as a result of some of the impact of COVID and more prevalent events, weather events, etc. And as a result of that, you see the insurers trying to grapple and deal with their model moving forwards. And a lot of them, they've had a number of staff leave post-COVID. They've gone to hybrid working. They're developing more technological ways of serving clients, lots of portals, etc. But within that, you start to see insurers effectively becoming, especially more recently with the cycle, you start to see perhaps being choosier or pickier about the type of risks that they want to underwrite. And if you compare those two issues, it is more work for a broker to place the right risk with the right capacity provider. And then alongside all of that, you've got the ongoing market conditions with the labour market. It's much more competitive now to get the right people in, especially for fast-growing businesses, for some of those resources as you expand your business. And then lastly, huge amounts of regulation going in. And, even just recently, you've got consumer duty, multi-occupancy. You combine all of that and the workload within the broker has definitely increased quite substantially. And the effect from that, and it's interesting that Olly's here, is one of the impacts of that is you do see a number of people sort of as also coming to market and saying, look, actually, I started my broker up to trade and look after my clients, and it's actually becoming a lot more of a complex environment. So yeah, there's a lot of friction and pressures which are just making the current trading environment with clients, it just takes longer.
Absolutely. I think you've touched on a number of really key elements there that have been impacting the broker market over the last couple of years, and even more so over the last year as well. I wanted to come to you as well, Paul. I know Mike's given us quite a comprehensive overview there as well, but I wanted to ask you the same question. And congratulations again to the 17 group for also making the high flyers list in the top 50 brokers report. But from your perspective as well, what are your thoughts on the current challenges in the broker market, and how has 17 been preparing for those?
Yeah, look, I think there's every broker, regardless of your size or shape, there's factors outside of your control. The economy, Mike mentioned the recruitment market, political activity. There's some factors within our control as a community. The pace of regulatory change is one. The dominance of actuaries within our sector is another factor. Service of insurers. We can influence these matters. And then there's the individual challenges as a business. And I would say two things there. I think, firstly, every business should have a business plan. I see a lot of brokers that are thinking about the year ahead, but actually having a documented plan shared with your staff, look into the future, and out of our own business planning. We had to deal with Brexit, so we set up a business in Germany. We created Touchstone. We've launched a new cyber team. We've created other new teams, and these have all arisen out of business planning for the business. So I think that's essential. And the final thing in tough times is always be aware of your culture and promote your culture. And that will differ from firm to firm. But for us, it's being transparent. It's trying to do the right thing, not only by our clients, but for staff and for our insurers and other stakeholders in the business. So we want to be a responsible business. So I think culture is ever more important when times are tough. But that's how we try and tackle it. Good business planning and thinking about our values and culture.
Absolutely. I think the value of preparation always comes to the fore in tougher times. And it seems that both of you have absolutely faced into that reality as well. And Olly, I wanted to come to you as well from a slightly different perspective that you have, from an almost top-down perspective of the broker market. What are your thoughts on some of the challenges that Paul and Mike have mentioned, and what it takes to operate as a leading broker?
Well, I think the biggest issue is that acquisitions build size, but integrations build a business. And I think we look at the market as sort of interested parties and are concerned that what we're seeing is very large brokers being built, but we're not necessarily sure that they're very, very consistent. They don't necessarily have a common culture. And I think there's a risk that that's going to comes to fore in years to come, particularly as earnouts finish and then people are no longer tied in. So I think to become a leading broker, it's not just about size, it's about integration.
Absolutely. And I mean, how could you offer some insight into some good examples of that integration that you've seen perhaps, and how best do you integrate a business that you've acquired when you're growing quickly?
Well, I think one of the things is that you've got to buy businesses which are similar to yourself, because if you buy businesses very different, it's very hard to have a common culture and integrate them. And I think both 17 and Clear have done a good job at that. They're both very clear about what they are, what's important to them, and I think that reflects in the acquisitions they've been making.
Absolutely, and that's something that both you, Paul, and Mike mentioned, is that the importance of culture when times are as challenging as they are in the economy. Okay, so let's dive into something that both Paul and Mike mentioned in terms of the headwinds that brokers are facing in the country at the moment, and that's one of insurer service. And one of the biggest conversations that we have as Insurance Times with brokers when we speak to them is that insurer service has been somewhat worse since the pandemic and has not necessarily improved at the rate that brokers are trying to have it improve at. So I know that you mentioned, Mike, about the issue of digitalisation and how that's impacting on service. Did you want to kick off with an explanation of what your perspective on the issue of insurer services and what do you think is causing it, and if you dare, how you think it could possibly be improved?
Yeah, and look, it's a wide ranging, and it's a big topic, but I think it's a residue of a number of things which I kind of briefly mentioned. It's insurers have moved to some extent post-COVID to sort of different models. They've had to deal with sort of huge amounts of business interruption claims, and that's now moved on. But you still get a sense of, as they have moved into new models, that they are sort of grappling with how they can make themselves more efficient with technology. And in some ways, they are moving the dial, possibly in a way which is not at the same pace as or the brokers aren't at the same pace. And brokers typically are very relationship-led businesses, and brokers trying to move the dial or actually adapting to what the sort of communication methods that the insurers want is not necessarily completely in lockstep or aligned. You get at the same time, there's huge amounts of potential for technology change, and I totally agree with Ollie. I mean, we've in the last 18 months, we've spent a lot of time and effort putting everything into the cloud, making the business more resilient, everybody onto one platform. And from that, we have our own software tech house, which means that we have the ability now to use our own schemes and capabilities to sort of speak to our platform, and then from that speak to insurers. But that's not something that happens quickly. That takes a lot of sort of forethought, time and planning and investment. So there's a slight, I wouldn't say there's complete linkage between the insurers and the brokers at the moment. I think that needs to evolve and improve. I think as the insurer model has developed as well, you can see they've started to concentrate where their offices are. So, for instance, we have got 3 businesses in Yorkshire. We've got about £60 million worth of GWP in Yorkshire, and in Sheffield, typically that used to be quite a big hub for insurers. Typically, they've all largely left Sheffield. They've now all servicing out of Leeds. That works, and it can still work very well. But being a relationship-led business, typically where service is really good is where there's very good kind of one-to-one relationships and there's trust built up. And I think as the insurers have developed their models, there is still closer connectivity required with brokers to make sure that relationship is reacting quick enough. And it's not just servicing. Then you've got all the issues around claims. We all know the sort of cost of supply chain has increased significantly, whether it's in motor trade, or even in sort of the property sector. And that in its own right means that the sort of speed of response to get things done sometimes is slower than it should be. So fundamentally, there is the model, and the markets have moved on. I just think at the moment, the way some of the insurers are developing their models, the brokers, the linkage needs to improve in order to make sure that the clients are served as quickly as possible.
Yeah, absolutely. I mean, from my perspective, it does seem a little bit like the insurers are on this digitization journey, but have sometimes forgot to bring the broker partners along with them in the same sort of developmental speed. Paul, to come to you on the issue of insurer service for brokers as well. I mean, what's your perspective on the issue, and what do you think is causing it?
Well, I think brokers are very clear what we want, and it's easy access to experienced underwriters who can respond within a reasonable time frame. And if you've got e-trade business, that there's less referral touch points on that business. So brokers know what they need. I think the whole question of insurer service has struggled. We tend to blame the pandemic, flexible working, and yeah, there's no doubt there have been factors recently. But the harsh reality is insurer service has been deteriorating for some years. And we should remember the UK model is very different to many overseas agency broker models. You can get small brokers in the UK dealing with hundreds of agencies. And if you go to America, for example, an agency there will control a very limited number of relationships. And it's easier to improve service for both insurers and for brokers if you're dealing with fewer partners. So you tend to think in the UK that at some point there's got to be a greater placement strategy to help improve service. But I also think insurers are fighting a losing battle in many ways, trying to deal with the fast changing landscape in the UK. We've got networks, we've got consolidators, we've got global brokers, we've got MGAs, we've got e-trade, the traditional broking. And most of the composites are dealing with a couple of thousand upwards of agencies. So I can't see this situation improving in the short term. What brokers therefore need to do is say, okay, if it's not going to improve in the next 2, 3, 4, 5 years, what can we do as a firm in terms of our placement strategy to get improved service to our clients? And that is how we started originally all those years ago, setting up Touchstone. It was originally there to handle our SME business because we couldn't afford to get incorrect documentation from an insurer. You send a document back twice, your profit's gone. So we, as a broker, we've had to think about how we can improve service to our clients. Insurers are not going to change dramatically in the next couple of years.
Yeah, it's a really interesting point that it's almost incumbent on the brokers themselves to figure out a solution there. And I mean, we can do all of the communication we like with insurers to make sure that they are best serving our requests, but as you say, there's also a responsibility to serve customers from the broker perspective, and I think Clear and 17 both do that quite well as well. Olly, I wanted to come to you as well on this issue of insurer service, and from your perspective, I mean, how is that impacting on the brokers that you speak to?
Well, I'm glad to say I've never placed a policy in my life, so I have absolutely no direct experience whatsoever. But what I can talk about is the structural impact that has had. I mean, first of all, and this is across the piece, very large companies are very bad at technology, because by the time they've actually made the decision what they're going to do and consulted with all the different parties and agreed a response, they're probably 2 years behind. So, and insurers have come into us and said, we are beep, beep, beep at technology. So that is a fact. Very large companies struggle with fast changing technology. So what's the structural response to that? Well, the structural response to that has been the growth of MGAs. So if you can't do technology, you get a small business who's very focused on a particular customer group to build technology to service that customer. And what you're seeing increasingly is the insurers are becoming lumps of capital. Now they're fighting resisting this, but in reality, in the long term, they're going to do less direct business and they'll just become allocators of capital. So that's what's happening across the industry. I like Paul's point. I mean, in the sense, you have to think that brokers aren't rewarding service from the insurers. And what we see with the consolidators is they go around, they buy small business and they go to the insurer and says, right, we want a high level of commission. Well, that's not rewarding them for service. So to a certain extent, you have to blame brokers because if they really were rewarding service from the insurers, there would be 1 or 2 insurers who had really good quality service. But it comes at a cost. It is not free. So I think that it's really up for the industry to decide what they want to do. And at the moment, we haven't seen that. But I suspect as the wave of consolidation slows down, as it will do, we'll then see going back to more focus on client service and brokers and insurers differentiating themselves.
Absolutely. I think that's a really interesting point. I mean, did you have anything to add to what Ollie had said there, Mike or Paul?
Yeah, look, I agree. I think you've seen a whole raft of MGA spring up over the recent years, and I think that is people have seen the opportunity to specialize in a specific area and perhaps replace that direct relationship with a very responsive relationship with brokers, which in some particular product lines and particular areas, either the insurers have sort of said probably not in our basket of appetite at the moment, or actually it just you just get a natural bias and weighting towards finding the market that will respond to you quickly, and you do see that, you know, the number of MGAs that have either been created, specialist teams coming out of insurers setting up MGAs. I think it is just a natural byproduct of part of the, you know, frictions and challenges that have been present for the last 5 years or so.
Absolutely. Paul, is that do you think the same?
Yeah, exactly the same. But I think also the change of senior personnel within insurers is a real concern when you're looking for continuity of strategy, of service levels, of deepening relationships with brokers. It's really difficult when there's changes at the top table of the major carriers on a regular basis.
Absolutely. I mean, you need that consistency, and as you mentioned it previously, Paul, there's the importance of one-to-one relationships and trust, especially in the broking business, and the specialism of underwriting is incredibly important. And as you say, Mike, insurers leaving to set up MGAs is, I think, a response to that issue of service that we've just been spoken about. So to move on slightly as well to a bit more about the top 50 brokers report, the broker market is in no means a monolith, and it is absolutely segmented between, you know, the very small players that I think you were talking about, Paul, the very medium-sized brokers, but both of you manage, and the very big kind of titans of the industry that come across the world. So with different challenges such as regulation, I know you've mentioned that, Mike, facing different types of brokers differently, let's dive into a bit of the kind of personal perspectives of how you're facing into those challenges from your perspective. So Ollie, did you want to kick us off as well from the specific challenges you see for smaller brokers you work with, and then also maybe the other end of what challenges the very biggest brokers are facing?
Well, I think what's interesting is people always talk about regulation being a driver for people setting up, but that's actually not been our experience. And I think that's partly because the very small brokers are seen as low risk by the FCA, and really the level of interaction is extremely limited. And we recently sold a very small broker, and it had very poor compliance, but actually looked after its clients very well. And when they sold to a larger broker, the compliance regime will have changed, but they were still looking after their clients. So I think regulation can be overstated as a factor of consolidation. I think a key issue for smaller brokers is staff. I mean, it's across the piece, but if you're a small broker, it's very hard to employ, if you run a business of 10, 15 staff, to employ your number two and to pay them sufficiently not to work for a bigger business and to get succession. And that's why many brokers are selling, because they don't have the next generation coming through. And it's almost impossible to do, particularly in the current market conditions. What I would say is that, and it sounds odd, but in the end, this drive to digital will benefit the smaller brokers, because digital is all about just putting in data. There's no relationship. If, as MGAs, but particularly insurers, get their act together slowly on technology, actually that will level the playing fields for the smaller broker, because they'll have the same level of service and access as the larger brokers have. So I think that's small brokers have no problem surviving in this market, but the issue they have is the owners getting older. And at the top end, as I was saying, the challenges for these very large companies is to generate a single culture. And many of them are private equity held, and therefore they have to grow. And therefore that becomes an increasing challenge, as there are fewer businesses which in a sense are similar to themselves. Now we're seeing many brokers going to Europe at a very rapid pace now, and that again will increase the challenge, because there'll be another whole set of cultural issues that hasn't been dealt with before.
Absolutely great. That's really interesting perspective on both the smallest and very largest brokers as well. I mean, Paul, from 17's perspective, what specific challenges are you facing into because of your company's place in the market in terms of size and focus and strategy?
Yeah, look, we're a medium-sized broker, so we'll face all of the challenges, recruitment, speed of change from an IT perspective, but also, I look at the business and the amount of investment we're having to make in non-trading areas of the business is forever growing. So as a broker, we need to understand more clearly where our profits are being made and which clients are profitable and not profitable, because the world is only moving towards greater transparency of earnings, and that will hit our sector. We've already had the property owners issue this year, and you can only see that trend continuing. So understanding profitability and continuing to invest in the non-trading elements of the business are going to be crucial for brokers. But for us, the challenge is to remain independent, which is our objective. We're one of the largest independents. We're proud of that independence, but the pressures in the market are such that it becomes more challenging. And we're a debt-based business, so we don't have private equity owners. So if we borrow money to buy a business or to invest in broker insights, which we've done recently, or invest in a new cyber team, we have to generate profit or lend that money and pay higher interest rates, which the market now requires. So, financial management and governance are crucial for us going forward.
Absolutely. I mean, we've just got a question on the Q&A come through specifically for you, Paul, and you mentioned it again just there, the issue of recruitment. And could you elaborate further on the challenges that you're facing in that specific area of the market? And is it to do with what Olly was talking about in terms of being able to compete with the larger brokers there?
Yeah, I mean, at the junior level, we have an academy, and we bring people into the group in claims because that's the best place to learn about insurance. But that's challenging, and as an industry, we don't market ourselves well to universities, colleges, schools. So firms like my own have to do that ourselves. We create relationships to try to get that new intake of business. But there's no doubt following the pandemic that a lot of hugely experienced people called it a day on the insurance industry.
Yeah.
So that's left a massive talent gap at the senior level as well. So it's pressure at both ends, and competition has never been as high as it is currently in the job market for highly experienced staff.
Absolutely. I think that's something that every broker I've spoken to has been emphasizing, is that there is a talent gap, and if we don't address it now, then it will only widen. So it's really interesting to hear your perspective. Mike, to come to you on the specific perspective of Clear because of its place in the market. What are some of the challenges that you're facing into because of your size, strategy, and focus? And I know that Olly mentioned kind of move into Europe as well, and I know that's something that Clear is potentially exploring.
Yeah, look, I think what this comes down to is the market is ever changing. There's more consolidation in the market. The capacity provision behind it is as we've discussed, is there, but the way it's undertaken is move forwards. For me, the key thing that we do, and I think Paul sort of mentioned it earlier on, is just having a really, really clear strategy and plan that goes out about 5 years. And what that allows you to do is take stock of where you are, where you want to go to. And it's nothing really to do about scale. It's actually about capability. What sort of business do you want to be? What do you want to be known for? And that's something that we hold really quite dear to our heart. We've got people in the business. I mean, I'm sat here having been in the business 3 years, but actually Howard Lickens, who set the business up in 2000, is still a central role and figure in the business. We've still got many long-standing people who've been in the business for sort of 20, 25 years, with continuous service from acquisitions, etc. And really what you want to do is sort of hold true to your DNA, but have a very clear plan of what you want to be in sort of 4 or 5 years' time. And then have a very clear investment plan around that. And that lets you then weave your way through the regulatory requirements. It lets you adapt to changing distribution methods. And that's where you see businesses being relatively agile as to how they are adapting to the markets. I think if you are either, as you say, a very large company or a very small one, you've either got a challenge about agility, or you've got an investment issue around pushing your model forwards. So I think possibly, quite fortunately, where Paul and Clear is, we're in an area where we're big enough to have impact, we're big enough to have good investment plans, and really sort of understand where we want our businesses to be in sort of 4 or 5 years' time. I think going back to that point about the labour market, I think one of the things we also benefit from is because we have a focus on doing the right thing for our clients and growing organically, but also being buy and build type businesses, you constantly have this refresh of people joining your businesses. And if you, as Ollie said, if you buy the right businesses and you've got the right quality of people coming in, then you can utilize those very effectively into the business. And if you look at our business, although we've got a lot of long-standing people in the business, we've also, all our regional managing directors are people who joined the business since 2018. We've got most of our sort of marketing team is people who've joined in the last 4 years. And so it goes on. So you get the ability, as long as you acquire the right businesses, to blend those people into the business. And that's hugely helpful. Where perhaps you have some more challenges is some of those slightly more technical areas, which are perhaps central resource technical areas where you wouldn't necessarily secure them through an acquisition, but you require them as a larger company. And those are the type of roles which are, in some instances, quite difficult to get a hold of.
Absolutely. I mean, strategy and clear planning, as we said at the top as well, is absolutely vital as we face into some challenging environments, and specifically around regulation and hiring. And I think the impact of M&A there is absolutely vital to discuss as well. And that's actually what I wanted to talk about next in terms of the challenges that the market is facing. So we've put together the 2023 version of the Top 50 Brokers report that's come out, and both 17 and Clear have done very well. But what I wanted to talk about next is potentially how those rankings might change, and how M&A and consolidation might continue to impact on the broker market in the UK. So to come to you to start with, Ollie, I mean, having put together the data for the top 50 reports for a number of years, what are the trends you are seeing that could shake up next year's rankings?
I think the first thing to say is that mega deals happen very infrequently, but they happen at a sort of, they do happen. So for instance, MarshBerry and JLT, the market was completely shocked. You know, good Lord, what an extraordinary transaction. Or Willis and Aon trying to merge. So it's very easy to forget that because they only happen every 2 or 3 years. But we will see at the top end major transaction happening. They will be unexpected. They will suddenly come out apparently out of the blue. But there's that huge pressure for businesses to consolidate. And that's partly financial engineering. So at the top end, you will see mega deals. We typically won't see them coming, but they will shake up the industry. And I think sort of at the medium part of the market, we are going to see the consolidators being consolidated. Now, I've been saying that for years, and it hasn't happened as yet, but it is going to happen at some stage. Again, we shouldn't be surprised by that. We are seeing private equity now being a net exit from the industry. So they're no longer seeing the opportunities to buy a platform, consolidate, because the platforms aren't there. So as the PE exit from the industry, we'll see the consolidation happening, and that will be driven by trade. And I think that it is a warning sign that as prices continue to go up, that at some stage, the returns that people have got historically from these transactions won't be there. And we could see some of the very highly geared vehicles getting into trouble, and that might be a driver of consolidation. At the smaller end, we will still see people being bought up as they get to retirement age, though currently the prices are such that people who are, let's say, in their late 40s, early 50s are looking to exit because they're thinking, oh, this is fantastic. So the market remains very strong, but I can see some dark clouds out there.
Great. Okay. I think that's always an interesting perspective with your long experience of using the data to put together the rankings. It's always and the consolidation is continuing, as you say, and we shouldn't be surprised of the mega deal. Paul, I wanted to come to you as well. I mean, what are some of the trends that you're seeing that will become increasingly important for brokers competing in UK general insurance?
Yeah, I think changing skill sets. I mentioned cyber before, where everybody's talking about AI at the moment. So the skill sets of brokers needs to develop. We've been weak as an industry in terms of account exec knowledge of business interruption. Now, business interruption has been around forever, but I'm still staggered at the lack of knowledge to truly construct a BI program for a client is lacking. And you can see similar happening in cyber, where it's such a fast changing space. So how you attract, retain and develop staff to deal with changing risks is a huge trend for me. And I think for those brokers seeking to grow, cash flow is the best barometer. We've got businesses that are borrowing money to make acquisitions. That comes at a cost. Plus, if you've made previous acquisitions, there's earn-outs being paid for previous years. So I think the great barometer will be around cash flow. But of most concern to me is the environment that exists, which doesn't support new entrants to the market. And I think in the longer term, that's going to have if we're seeing underwriters going from insurers into MGAs, and we're not seeing young brokers, young professional people wanting to develop new broking businesses, then in 5 or 10 years' time, there's a price we're all going to pay for that, because the consolidation model is continuing at pace. But if you haven't got new blood coming through, then there's an issue.
Absolutely. I think that's incredibly vital to mention, is that with the consolidation, there needs to be a refreshing of the consolidating targets. Otherwise, the process cannot continue. I mean, is that something that you can comment on, Ollie? Are we seeing that regeneration of targets that is necessary for consolidation to continue?
Well, actually, I mean, you can talk about quite large numbers, but in fact, in terms of the number of people they employ, they're very small. So no, we're absolutely seeing the market consolidating. And it's sometimes quite hard to pick up, because quite often smaller brokers, they don't sell the business, they sell the book of business. But there is no doubt that although business brokers are being replaced, nothing like the scale that's required to keep the business at the current structure. So no, we are seeing consolidating. That's absolutely clear. And I think in 5 years' time, it will be a very different market.
Absolutely. I think that's absolutely clear. Well, what's more complicated is figuring out exactly what that will look like, and we'll look forward to seeing it, I'm sure. I mean, Mike, can we come to you as well with the same question on how you believe, what trends you believe are going to impact on how the top 50 brokers grow and change places?
Yeah, I mean, look, you see a number of the smaller buy and build model businesses which don't yet feature in the top 50. They no doubt probably will do in the next iteration. There will, as has been indicated, there might be a little bit of consolidation within the model itself, within the top 50, and therefore people will move around in there. I think people look at the top 50 and it is done around revenue and it's done around scale. I think as much as that's important from a personal perspective, actually what's more important is having something which just differentiates and makes your business, what makes your business have a fantastic reputation. Because fundamentally, what your options are in the future as a business, I think whether you're 13th, 25th or 45th, it's actually more about what is the quality of the business and what differentiates it, what makes it stand out, which is actually more important than physically what number you are in that top 50. And I think that comes back to that whole point of being really clear about where you're going and invest in the capabilities that you want to have to make sure that you absolutely stand out and you've got a fantastic reputation. I think what I think we will see though is no doubt continued consolidation, but as people see that consolidation happening, I agree. There's not tons of new brokers starting to set up, but we have seen people setting up MGAs, and you do get a sense of people stepping out and setting up as an AR, because actually the threshold to get authorized straight away is probably, you know, fairly challenging at the moment. But that doesn't stop people getting starting up from an AR perspective. And certainly within our business, we've got a network, Brokerability, and the redeveloped proposition, which has been created in the last 12 months, actually has a tiered membership system, which allows for that, because we recognize that's probably going to be an area of potential future growth in the future, where people spin out of a larger broker that's been consolidated, or one of the bigger players. I think it's actually, look, you know, things have got so big for me. Actually, I quite fancy doing this myself or with a small team of people. And some of those over time will develop into specialist niches. They'll use technology and they will grow in their own right. So I would agree with Ollie that the rate of replacement isn't there yet, but I do think perhaps that there is the potential for it to pick up again in due course, actually, frankly.
Absolutely. I think one of the enduring truths about the broker market is its entrepreneurial character, and it does attract the sort of person that I think, as you say, Mike, wants to kind of try something for themselves and try and improve service for customers vitally, which is something you mentioned, to make sure that they are getting that. And I think, as you say, the volume of replacement for those targets isn't quite there yet, but as you say, it will continue to grow. So what I wanted to do now is go on to some questions from the audience. I know that we've got some other questions as well that we can go to if we run out of Q&A, but I don't think we will, based on the amount that have come in so far. So let's go to some of those for the last 15 minutes. So we have a question from Ian Pritchard, who has asked about the issue of insurer service. And he said, has insurer service deterioration coincided with the reduced importance placed on the role of an underwriter? Paul, did you have any perspective on that?
Yes, an interesting observation. And there's no doubt that the reliance on data has de-skilled or attempted to de-skill some of the qualities of underwriting. Because sadly, I've been around long enough, but the intuition of an underwriter, local knowledge. Yeah, Mike mentioned about Yorkshire earlier. I'm down in Penzance at our office down here. I think brokers down here have to go to Bristol or Birmingham to see an underwriter. So the lack of local knowledge, client knowledge, and just relying on data is very dangerous and not good for clients' outcomes.
Absolutely. Did you have anything to add on that, Mike?
Yeah, no, I think that's spot on. I think, I mean, we've got to be careful we don't throw all the issues at the insurers there. I think certainly that the market has changed. The risks and exposures that clients are facing will have changed. And I think what insurers do need is a very clear proposition and set of data and clarity in terms of what people are asking them to underwrite. And historically, sometimes people might have just regurgitated last year's and just updated it. I think, you know, we've gone beyond that now. So that's where, but I do agree that that link with local underwriters who can really get under the skin of it is critical. There is also where, and I don't want to sort of jump ahead too much, but also that's where, to some extent, if you are putting that document into the insurers to sort of be really clear about what is required, I think that is where technology can help in the future, actually. And at the moment, you know, if you look into a broker, you see people increasingly getting involved, especially if brokers are on multiple platforms with data all over the place. They're spending an awful lot of time having to do some manual work and actually removing all that to make sure that your quality brokers are spending time producing quality reports for the insurers is also going to help. And as much as I'm not trying to shift the kind of focus here, you know, that's where, for instance, some of the technology around AI, etc., will help. Actually, it will get rid of some of that stuff and allow people to focus on the more technical aspects of what they're asking of their insurers. But fundamentally, it does come down to that. It's making sure that connectivity is there. And at the moment, I just think perhaps we're a little bit too far apart between broker and insurer.
Yes, I think what we're going to see is brokers doing more and more of the work. And you may see insurers using AI just to keep an high-level eye on their brokers, but they'll be saying to brokers, look, it's your job to write the business, it's your job to really price it, and we're going to watch two things. We're going to watch the results, but we're also going to use AI to make sure we're not going in the wrong direction, that we're not picking up risks that we didn't want. But the answer is that, and Mike was saying this, you can't blame the insurers. The insurers are just responding to the market. It's what the customers want, and what customers want is defined by the brokers. So I think you're going to see the brokers doing more and more, and the insurers becoming lumps of capital using technology, AI, to make sure that the brokers they're working with are doing broadly the right thing. But insurers are not going to provide the service that clients require. It's the job of the brokers to do that.
Absolutely. I think one of the other questions we've got, actually, Ollie, leads on from that in quite a good way. So coming at it from the other perspective, we've had a question from Martin Hall saying that your point about brokers rewarding insurers for good service is a very good one. And rewarding insurers for good service rather than brokers driving up their own income, especially from the consolidators, and what impact Consumer Duty might have on that with its focus on ensuring that there are deliverable and measurable customer outcomes. Do you see that point?
Yes, I think it's a very complex one, this, because the risk is that the broker tries to reward the insurers for good service, and the insurer doesn't recognize it and therefore doesn't give good service. So it's actually it's a current structural failing of the industry, and the industry has got to develop ways of being able to measure good service in both directions. Because there's no point in me providing a service to somebody if they're not going to pay me for it. So it's not the insurers or the brokers. It's actually both have got to work out where they want to be in the value proposition. In terms of customer outcomes, I think what's very interesting is that this initiative has resulted in a huge change at St James's Place. I think we've seen their share price go down by about 50%. So customer outcomes has been used to restructure industries. I think frankly, the insurance broking industry is actually a pretty good industry. Most commercial brokers look after their clients. They don't need regulation to be told to do that. 95% look after their clients very well. So I think it'll have a less of an impact in terms of outcome, but it is important, and it does show that the goalposts can change significantly, and that can have a major impact on companies' profitability.
Absolutely. I mean, from your perspective, Paul, I'll come to you first, and then you could also answer, Mike. Consumer Duty has placed lots of new requirements on you, and as Ollie said, a good broker like 17 will have absolutely been doing much of what Consumer Duty asks before that piece of regulation came into effect. But the new requirements to evidence all of those sort of things, is that made more difficult by the issue of insurer service?
I think it has. We're looking at fair value. It's easier as a specialist business for us to go through that fair value analysis, and nearly 3/4 of James Hallam business is in specialist areas where we can more easily evidence the value to our clients.
Yeah.
Where you're reliant on insurers on more vanilla products, that task is huge. And most people in the market will say that the work done on the fair value analysis has had very little impact in reality in terms of products withdrawn from the market or improvements in those products. So there's a huge question mark with brokers around this issue. And we always feel we've given fair value for our clients, and that's part of our job on a case-by-case, policy-by-policy basis. But it is easier when you're in a specialist environment.
Absolutely. And would you echo those comments, Mike?
Yeah, very much so. I think if you look at the retention rates in the commercial broking arena, they are typically very, very high. And that's partly why there's such an acquisitive market, because it's quite difficult to get hold of clients organically in certain instances because they're typically being well catered for by their local broker. And in 99% of the time, I think those brokers are looking after their clients very well. What the Consumer Duty asks you to do is evidence it. And that's where, if you are on multiple platforms with multiple data sets, that becomes more of a challenge. So I think businesses, consumer duty for me is if you trust that what your business is doing is by and large it's the right thing for the client. What consumer duty is asking for is trying to take those people who are outliers out of the equation, and everybody else is being asked to evidence what they're doing is correct. And that has taken, for most people, quite a lot of time and effort to be able to evidence it. And that is just easier if you've got quite a joined up business. And it goes back to sort of Ollie's point right at the start of this, which is, what are you? Have you just built lots of things and they're it's just a disparate business, or is it all one coherent, cohesive business with decent technology and decent MI business information? And fundamentally, that is where I think businesses which are more joined up will just find it easier to evidence probably what they have been doing, actually, frankly.
Absolutely. That point about specialism serving fair value more easily is an important one as well.
And I think just adding to the point that Ollie made about the relationship with the insurer, that is where I think where you do get an advantage is if you can speak to an insurer and you can have a conversation about placing a level of scale with that insurer, and then from that scale, requesting or asking or demanding a service level that comes out of it. That is, I think, an easier conversation to be had than it is if you are much smaller and you're placing smaller amounts of business more broadly into the marketplace. But fundamentally, is every single risk needs to have a market valuation done on it. So fundamentally, you've still got to be able to prove you're doing that, but still use your weight and your scale to try and improve the situation so that this is a frustrating thing. The client really does not care or have any interest about the fact that there's a differentiation between a broker, an MGA, and an insurer.
Yeah.
They just want their risk insured, frankly. And whether that's done by one blob or three blobs to them is just bloody irrelevant. It's just they want decent service. And that's the bit that we collectively as an industry need to connect up much better, because ultimately, it's all about the client at the end of the day.
Absolutely. Yeah. And that comes back to the issue of insurer service as well, doesn't it? Is that the ultimate outcome is that the end customer receives that good service, and that needs to be made as easy as possible. One of the other questions we've got from Richard Wilshire is, I think, very, very well aimed at the panel that we have today, is how do medium-sized brokers strike the balance between being innovative and flexible with the need for effective risk and control management and assurance? So, Paul, could you speak to that at all?
Well, I think it comes back again to having specialisms within the business, because there you have knowledge of the sector, knowledge of the client, knowledge of the markets, insurer markets in that sector. So that's how you add that value. And so you can still be a big business. 17 employs 400 people, so it's a medium-sized business. But the majority of our people are involved in specialist areas. And even within claims, we have guys in our claims team developing their knowledge of cyber claims, for instance. So the specialism has to, and risk management, we have specialist risk managers in hospitality, food, etc. So it needs to run through the business. So you can still grow and be a medium-sized business.
Yeah.
You've got to have that focus on the client.
Yeah, is that something you'd largely agree with, Mike? I'm sure, but anything to add on that point?
Yeah, no, I think it's spot on. Where we are, we have grown, but it is actually still very much about making sure that your sector specialists, your product specialists are they are the people who sort of will drive the agenda. And what you don't want to be doing is sort of clumping things together or centralizing things in a way where you kind of lose that knowledge, that experience, and that capability. I think what you can do though as well is provide the wrapper around those people on some of the sort of risk management and compliance management fundamentals, which means that although we make sure they're making sure they do they're doing the right thing, there are certain checks and balances you can do in the background, which just corroborates the fact that you are doing the right thing as well. So having that methodology that sits behind those specialist people is extremely helpful as well.
Right. Did you have anything to add on that point, Ollie?
Well, I would just say that a few commercial brokers make a net margin of about 40%, indeed higher than that. And some commercial brokers struggle to break even. And that is fundamentally down to those brokers that are struggling to break even have not thought about over the long term what their value proposition is.
Yeah.
They've just written businesses that come through their door. It's really important that brokers work out where they add value and reinforce those elements, aspects of their business, and not try to be all men to all things, whatever the phrase is, all things to all men.
Yeah, absolutely.
And women.
Great. There was a question that I think is that you'd be well placed to answer, Ollie, that's just come in as well. With private equity now being a net exiter from the market, do you see a renewed emphasis on organic growth and differentiation rather than having an executable M&A pipeline being a driver of value for brokers?
Yes, I think we are seeing that. I think a lot of consolidations are talking about organic growth now. I think that if businesses are always looking to grow to be successful, and as the opportunities for acquisitions diminish, organic growth becomes a key emphasis. But as I think Mike was saying, it's very hard to grow organically if you've got 95% renewals. And that's what's driven the acquisition strategy. So I think organic growth is hard to achieve, and everybody appears to be growing organically, but that can't be the case. So someone's got to be losing somewhere. Organic growth is a hard yard, but it's also what really is the yardstick to measure a quality business.
Absolutely. What's your perspective on the issue of organic growth, Mike?
Yeah, I think that's right. I mean, ultimately, it's the litmus test of a business, frankly. So solid organic growth means that your underlying business model is working, and if within that it hits a number of areas. It's new clients, but it's optimizing your model to support those clients in an efficient way. And it's just making sure that out of the value chain, you are taking an appropriate amount of value out of the value chain for the services you're providing. And it's then optimizing that to make sure that you're proving internally and externally the fact that you've got a healthy business. And remember, that's important as well, because it is that money as well which is then reinvested into the business. I mean, in the last year, we've spent about £3.8 million on investing into technology and services, and we're constantly looking at where next to develop our proposition. That takes money investment, and frankly, ultimately, you need a healthy organic business in order to perpetuate that.
Right. And Paul, anything to add on the perspective of organic growth?
There's some brokers in the past where if the music stops and they stop buying brokers, they probably have fallen over. And the true measure is can a business stop buying businesses and still have good growth, be a good home for staff and clients, and have a future. And I think we certainly, as 17, look at ourselves in that light regularly. Acquisitions are fine and they're good to accelerate growth, but what does the underlying business look like?
Absolutely, as you say, Mike, it's a litmus test of a good, well-performing broker, and I think those ones will have the longevity in the top 50 brokers report as well, as they manage to stick around. Perfect. So that's all we have time for today. I think it's been a great discussion and really enlightening to dig a little bit around the factors impacting on the broker market, and especially those brokers that appear in the top 50 brokers report. Thank you to Ollie, Mike and Paul for taking the time out of your busy mornings to join me on the panel. And I'd like to just end by reminding you all that a recording of this event will be made available for anyone that wants to listen back to it or share it with their colleagues. And also wish you a big Insurance Times Merry Christmas and Happy New Year. Thank you all and goodbye. Thank you for joining me, panelists.